Hi guys, this is Dan with Pad Scouts. I've got Juan with me from Compass Mortgage. How are you, Juan?
Pretty good today.
Yeah, awesome, man. Thanks for coming on. I know a lot of people have a lot of questions about what's going on, and people are hitting me up. So I just wanted to kind of touch base with my reliable lender here and kind of just talk through what you're experiencing on your end.
Yeah, I appreciate that. Yeah, it's kind of challenging right now with obviously with the crisis, and since the beginning of March, there's been a lot of changes with pretty much end investors. Credit scores requirements haven't changed, but end investors are tightening up and wanting to see higher credit scores. So that has changed, and especially with big banks, they're requiring even a higher credit score to qualify for common loans like FHA, and even conventional loans. So you do want to check with your lender to make sure that they can do the credit score. If you were pre-approved in February, that doesn't mean that they can actually do the loan now. So definitely
Right.
something that you want to check.
But for those that are already under contract and have started the application process, that hasn't impacted them, correct?
And it could impact them, if
Okay,
especially if their current lender is not offering, um, doesn't have those end investors with those credit score requirements.
got you.
And that's I've heard that's been happening. So we've been trying to save some deals like that as well when they
Yeah.
no longer offer that. Even though it's locked, they can't really do anything with the loan. So um,
Yeah.
that is happening, unfortunately.
I've seen a couple of deals, kind of go bad due to different scenarios with different lenders because they don't offer certain programs anymore, or they got, through it. So definitely it's good to kind of know that different lenders have different things going on. It's you're not just stuck with one specific type of loan and one type of guideline. Is that kind of what you're saying?
Yeah, we have multiple products, but
Yeah.
to be honest, is the market is very volatile right now,
Yeah.
and we kind of have to work with our client, whether that is if we have to improve their score to get them to a certain program, then we might have to do something like that. Um, but we are pretty aggressive with the credit scores that we offer currently. So
Okay. And then as far as like affordability and types of housing that they can afford, has any of that changed? Like a limit, are they limiting, what you can buy? I know that there's been some question as to if you're claiming rental income that no longer can be, used.
not that I know of. No, the guidelines are
I
still the same, pretty much.
Okay.
Um, there's still down payment assistance. That's even still out there and available. That
Yeah.
hasn't changed. So some of
Okay.
those kind of things that you hear about, sometimes they're called overlays. So
Yeah.
bigger lenders might have these overlays for right now during this time, and who knows how long it's going to continue.
Yeah.
So hopefully that changes in May and June. Is hopefully what I think is going to happen. We'll loosen up a little bit and we'll have products available again.
Yeah. So right now, currently, everybody doesn't know what to expect. So everybody's kind of tightening things up and then just making sure that everybody's protected in the end. Have you seen any changes in the refinancing? Are you guys still proceeding with the refinances, and are there still low rates available to clients?
That we're very busy with refinances right now. Approximately 45, 60 days plus to close a refinance due to the market. People are trying to take advantage of refinances, obviously,
Yeah.
because of lower hours, job situation. So there's cash, cash that they need. So this is pretty busy for us right now with refinances. So we're doing pretty well with that.
Awesome, awesome. What has kind of changed for you in the process? I know we're not allowed to obviously meet in person, but I know me and you have done business in the past where a lot of the stuff is anyway done through email and fax and all of that. Have you guys adapted pretty quickly to that, or are you seeing any new changes or new technology that you guys are using?
Our company is really great with technology and just getting information out. We're doing e-closings, so we have a little bit easier way to do a closing for refinances. But for me, I'm a face-to-face person, as you know.
Yeah,
It has changed a little bit. Obviously, it's a little bit difficult now, so I'm going to have my clients sometimes take pictures of documents, send that over, fax it, email documents. So that's kind of what I've been doing for the last month.
Yeah, but the process hasn't really changed that much more for you. You're still able to help all majority of your clients.
Yeah, of course. Yeah, as long as they give me the documents, whether it's again a text. Sometimes I'm receiving like 30 texts from a client with different pictures, and it is what it is. So I'm gonna help that client because that's the only way he can get the information over to me. So that's fine.
Okay.
Yeah.
Okay. Well, it's just nice to know that I know you've already done a couple of closing right in the past couple of weeks, and as we know, how are you seeing closings take place? I know my last two, my one of my clients actually just stayed in their car and basically documents were exchanged and put back into the place. The other one, they were put in a room separate from everybody, and people are calling in. Like, what has been your experience with closing right now?
Well, the title companies are offering what's called curbside closing, which what you explained. So,
Mhm.
they pull up to your house, they won't come in. You have to come out, grab the documents, and go into your house, sign them, and then they come back out and give it to the notary. And somehow you have to be visible signing the documents. So
Gotcha.
that, the title companies have their own rules about how they
Yeah.
want the closings to go. So that's mostly for refinances. For purchases, obviously they're going into rooms with no attorney. Sometimes attorneys over the phone. So the
Yeah.
attorney is getting the information prior to the closing to review all the documents and make a call to the client. And they're going to the closing and just verifying all the same information the attorney just went over. So
Yeah.
um, that's what's happening with purchases. And
Yeah. Yeah. I mean, like I said, it's kind of business as usual, but in a different sense that I feel like even the closings are going a little bit faster because there's not so much in between time sitting around. Everything is electronic. Everything is there. So I feel like I've seen a lot of these close a little bit quicker. Obviously there's a couple instances where that may not be the case, but for the most part, are you
you know,
seeing that?
I think, and I think our management touched upon this, is that it's going to change how we do business in the future
Yeah.
for the better because it's going to be
Yeah.
quicker because they're going to have these tools available to do closings a lot faster. So that's one good thing about this.
Yeah, and for us, as a real estate, company and a brokerage, it's changed a lot of what we're able to do. Obviously, it's changes what kind of homes we can show and how quickly we can get clients to actually view homes. We have with the limited inventory and some of the different things in place right now. A lot of properties that are occupied aren't allowing people to view the property unless they've already done a virtual tour and they're
Yeah,
super serious about it. But we've done a lot of video tours where we as agents, the houses they leave the house, we record a video and we send it over to the client or we walk the property. And actually, it's been actually really, really easy because the client's like, okay, I need you to zoom in on the kitchen or go in the basement, take a couple pictures. And for them, they remember the property a lot better. And then they can kind of compare and contrast. And then, now we're only looking at two or three homes, whereas we were looking at 10 or 15 in a day, right? So, that's kind of simplified our process too. And then, as you know, we've got a couple deals under contract during this time. So
yeah, yeah.
inspectors are still coming out, right? Your appraisers are still coming out to the homes.
They're still coming out. For the refinance side, there's appraisal waivers. So a lot of times you don't need an appraisal. So
Hmm.
we run it through our automatic underwriting system, and we've been getting a lot of them that don't need an appraisal. If they're just simply reducing the interest rate and term, then we don't
Yeah.
need an appraisal. So that's one good thing. But for the ones that do need an appraisal, sometimes it can be a drive-by appraisal. So there's also different rules for the appraisers
Yeah.
for um, getting that information to the report.
Yeah. So obviously they're still doing it a safe way and it's
Yeah.
still getting done. So there's still a way to get all the deals done that we've been doing, just a little bit differently. What kind of stuff are you seeing for first time buyers? I know there's a lot of scary information out there now that, like you touched on in the beginning, that you've got to have a really high credit score, a high amount to put down. What can you say as today, what we're looking at. I know obviously next week it might change, but what are you seeing right now?
Yeah, right now I would say that it's pretty difficult to do things under probably 620, even under 640. It's difficult. So those kind of clients, we kind of have to work with them right now to just see how we can get their score up for
Hmm.
the time being until that part of the market comes back. And that's probably the most challenging thing because obviously we have clients sometimes that fall into those brackets, and so we have to kind of tell them to educate them, help them get their score up, and once these programs come back with those scores, then we can get them locked in.
And would you say right now is probably the best time if you've been thinking about buying to kind of actually talk to you and start planning? Because as we know, there's not a lot of inventory anyway of homes. So if you start now, by the time hopefully this crisis is over and we start to see an influx of properties, they'll be the ones ready to go and won't be having to wait 2 or 3 months and compete with other people that have been holding off, right?
Yeah, of course, and then that's a good rule of thumb anyway. Is probably to get started 6 months prior. Because we can pull a credit report, tell you what you need to work on if you need to work on something, whether it's income or credit related or assets. So it's a good idea to start 6 months before. And then if there's an issue after 3 months, we could pull a new report and hopefully you're ready to go after 3 months. General, a credit report is good for about 90 days. So that's why I'm saying do it, 6 months. And then
Yeah.
after 3 months, if there's any issues, you're ready to go.
Yeah. And are you guys still doing that program where you can lock them in or pre-approve them? I forget the name of it. Are you guys
Yeah,
still running that program?
yeah, we pushed it a lot. It's called our Get Committed program. So basically, a Get Committed program is somebody that's ready to be approved now. We clear all their conditions, all their income conditions, their asset conditions, credit conditions. So basically, we're going to give them a commitment letter, and the only requirements are going to be a title of the property and the contract. And we can close those within 15 days, believe it or not. So if we get somebody through this process, we give them a commitment letter, and they can actually, instead of having a pre-approval letter, you have a commitment letter saying that all the information has been approved already, which to us is better than cash. That's what
Yeah.
we've been promoting, and we can close those within 15 days.
And how long is that good for again, you said?
90 days usually. That's the time frame for a commitment.
So if someone's kind of, ready to buy now, they haven't seen anything, but, the rates are great. If they go through this process, I mean, are they locked into the rate for those 90 days or no?
Unfortunately, you cannot be locked into a rate until you have a real estate
Contract.
contract. Yeah, and an
Okay.
intent to proceed. So usually, intent to proceed is after the home inspection, but
Got you.
we need at least a real estate contract to lock it in.
Got you. Okay.
Yeah.
Yeah, that's great information. That's a great program. I know we've done a couple of those and that helps with competing with, some of these homes that are very desirable and much sought after. And that helps with the competition because we can go back and tell the other agent, look, we can close in 15 days. This is just as good as cash, and explaining that, man, that gives us a great competitive advantage.
Yeah, a lot of lenders can't offer that because they're too busy with refi. So we're still offering that. I don't know of any other lender that's doing like a get committed program similar to ours. So it's something great that we offer as a company. And again, we're pushing those really hard. So.
Yeah, yeah, I agree. Anything else that you're starting to see or that you want to kind of get out there that we're seeing in the news that's confusing a lot of buyers or people that have been thinking of either buying or refinancing?
Yeah, the only other thing about the that I've seen in the media is a lot about forbearance. So
Oh
they
yes,
understand that forbearance is not forgiveness. It's not forgiving the interest or the payment. You're going to have to pay it down the road, whatever the lender decides to do, as far as terms of the 3 months or 6 months forbearance. But if you have questions on that, call me and I'd be happy to explain it. So there might be difficulties doing a refinance if you go through a forbearance and then try to refinance afterwards. So you do have to be aware of that.
now with this forbearance, it's company by company, right? There's no like one way of doing it, so each lender has their own
Yes.
rules
Each
in
lender
place.
has their program, correct.
Okay. So I've seen a lot of people that are, that are asking questions about this, and like you said, it's not a forgiveness. You still owe that money at
Yeah.
some point, either one lump sum when you're back on your feet, or over time, or I've even seen where they said they'll add it on to the back of your loan. So definitely want to check in with your lender and your servicer, right, for something like
Yeah,
that.
that program, they used to add it. That was the most common thing. They would add it to the end of the loan. Now I've been hearing that they've been wanting to get paid over, 3 to 6 months,
Yeah,
over 3 years. So you have to check with your current servicer to see what kind of terms they're going to give you for the repayment of the interest and all that.
exactly. Yeah, that's a good one. I meant to ask you that kind of in the beginning, because I've gotten numerous questions about that, and then obviously the terms and qualifications. So I think you did a real good job
Yeah,
clarifying.
the main thing about that, if you can make the payment, make your payment. Don't try to take advantage of forbearance because you're not really skipping any months. You're gonna have to pay it back. So if you're working, make your payment.
Got it. Got it.
Yeah.
Because again, it will affect you in the long run if you did want to refinance or sell your home. And what happens if you want to sell your home and buy another one and you did this, right?
Yeah, and that's the scary thing about it. We don't know how, they're not supposed to report you on a credit report. What about if the servicer, for whatever reason, messes up and reports you as a late payment and you were under forbearance? That affects
Hmm.
you. You can't
Yeah.
qualify until you fix that. So
Yeah.
you got to be careful if you're going to go through with that.
Exactly. Exactly. Great stuff. I really appreciate it. I think that's going to help answer a lot of questions. And like I always tell everybody, reach out to us. We're in the trenches. We actually do this every day, and we read about this, we answer questions. So, people need to reach out to us. Not everything you see on Facebook or on the news is 100% applicable to each person, right?
Right. And, sometimes you have a family member telling them, "Hey, my bank is doing this." Well, your bank might not be doing the same thing. It's all different with those programs. So, um, if you have a forbearance agreement, I'd be happy to review it with you and see if it's worth you doing it and review your situation. So, just give us a call.
Exactly. Awesome, Juan. Well, thank you so much for taking the time today to join me and explain things. And who knows, we'll probably be doing this in the next week or two if anything else changes or if we have any follow-ups.
I appreciate it, and make sure you wash your hands.
Yeah, of course.